We're back. Thanks for staying with us. Joined now by Robert Linton. He's a senior portfolio manager with Strattners Hedge Fund. Robert, welcome back to the program.
Thanks for having me on, Don.
Well, tell us again what Strattners does.
Sure, we work with uh, micro cap NASDAQ companies, and we help them raise money, um, get them to the next level. What we like to do is identify quality businesses that have tremendous upside, work closely with them, and get them to where they want to go, which is usually the NASDAQ. So that's what we work on.
Well, it's no secret we're in a challenging economy right now. Even quality companies having a tough time raising money. What are you running into these days?
Well, it kind of comes down to a company having realistic expectations. Lots of times you see companies come out and they'll start off with, say, 100 million shares, and maybe they're not even trading yet with any significant volume, and they'll have like a dollar price. And it's just not a realistic way to expect that the company is going to succeed, because if you do a comparable to another company that has 100 million shares outstanding and their price per revenue is, say, 35 cents, then they're nowhere even close. So the main thing that I find is that companies and CEOs have realistic expectations of what their price is. I'll kind of give you an example. When I started a company back in the early 2000s, or late 2000s, I should say, we came out, we had like about 100 million shares. We were at $1 and we hadn't even started trading yet. And then when it actually did trade, it started at about 12 cents. And I was like, oh my God, this is terrible. And then it even went down lower to about 4 cents. And it looked like, oh my God, my dreams are shattered. But the reality was that wasn't the case. It's just the initial corporate structure was such that it wasn't going to be attractive to investors yet. We had to earn that. And what we did is, we worked hard, we built up our revenues, and we worked with a smaller company such as ourselves, Strattners. And eventually we got the investment we needed. We built up the shareholder value, got it to about 68 cents, and it had a lot of liquidity, and it was a real company. We simply did a reverse split to get to the right price. We had the assets, the plan, the money, everything we needed, and we ended up getting NASDAQ listed. And when we first started the company, I'm traveling the world. I spoke at the United Nations. We did a licensing deal with an Indian company. I had the Chief Minister Modi, who's now Prime Minister, at the event. We did a lot of big, great things, and we knew where we wanted to go, but we wanted our valuation to be up there from the beginning, but we hadn't done it. But when we worked with this group and they funded us, we were able to get to that level and ultimately become successful. So what I find, especially when you have development stage companies, it's not so easy to fund them because they haven't really set their prices and their expectations to be realistic, where retail investors are going to put money into it.
Well, you have kind of a unique perspective because you've been on both sides of the funding fence. So you can give a unique sense of advice to these companies.
Yes, exactly. And it's like, we want everyone to be successful. We want them to be happy. That's why people start this. Otherwise, they would just go work for a corporation, and rather than being an entrepreneur and make a few $100,000 a year, they don't go through all this trouble to try to end up squeaking out a salary you could get working at Costco. So understandably, but to realistically do it and achieve it, you just have to work with a quality group that knows how to get that done, and has done it.
What kind of advice are you giving companies now that are coming to you that may perhaps at this point in their development aren't quite qualified?
Well, keep working, work on getting revenue. We know that they need investment capital, but pay attention to what gets that investment capital. If you're going to have people that are buying into you, and they're purchasing your stock through whatever type of transaction you have set up, they want to be able to see an exit strategy. So down the road, whenever it may be, they may be long term. It doesn't have to be something that's going to happen in a couple of months, but have a real plan. Work with the people who know what they're doing and have done it. Take the advice and stick to the plan. Increasing revenue. If you're spending money to develop a project, increase those or show those milestones. Show what you're achieving. Not regular news releases to let the investment community know that you're indeed making progress.
A lot of fund managers are saying there's trillions of dollars sitting on the sidelines right now. What's your experience with that? Do you see investors still looking for opportunities?
Yes, definitely. There's some exciting new areas that are opening up. The art world has been very fascinating to us with NFTs, and that's an emerging market. You got companies like eBay getting into it, and several others that are even listed on the NASDAQ. So we find things like that attractive. Places that have a very nice speculative growth, because those new technologies or emerging areas can have incredible growth, especially if you're a small cap company looking to do something big. I remember when Amazon started, it was, they just kept losing money, but the stock kept going up and up and up, because look what Amazon is today. They really had a future that maybe the common person couldn't see or understand, but it was that unknown area that kind of opened it up to the imagination. So those types of industries are exciting. Now, if you're in a more traditional brick and mortar type of business, then you need to just establish your growth, what the market potential is, what it currently is, what the market share is. There's companies that are making new drinks, energy drinks, oxygen infused drinks. There's a lot of exciting things, but that's kind of what we look for.
Now, of course, your investors are global, aren't they?
Oh yes, absolutely. It's definitely a world market. Everywhere. It's China, Hong Kong, Europe, of course, the U.S., all over the world. It is a world market, and we like to work internationally. We're based in Dubai. We're here. We have offices all over the place, and so it's really nice because our network is such that we're basically working around the clock. I find myself on calls at 11 at night or 5 in the morning. So that's just the way it works. But I enjoy it. I enjoy the international communication. I enjoy working with people from other countries. I find them to be very organized and respectful. And that's part of the game too. You got to love what you do, or you won't be successful.
Your company's looking for funding. They want to talk to you. How can you get in touch with you?
Well, they can contact me on my email, robert.linton@strattners.com. It's a great way.
Okay. Strattners Hedge Fund, Robert Linton. Positive aspect to the funding world. Thanks so much for joining us, Robert.
Always a pleasure, Don. Thank you.